Hi, and welcome back. In this series, we've been talking about the crazy housing market. Last episode, we specifically looked at the question, when will the housing crash come? This week, we'll ask, why are prices jumping so much? So why are home prices jumping so much? It's because the home market is a perfect example of supply and demand. Let's talk about supply. Normally, the home supply is measured in months of inventory. That is, how many months would it take to sell everything presently on the market? Traditionally, 6 months of inventory represents a balanced market, neither a buyer's market nor a seller's market. Personally, I believe that if the inventory is below 3 months, I classify it as an inventory shortage. The reason is that it's the level at which I see homeowners hesitant to sell because they are afraid they won't be able to find a replacement home, a place to land. We haven't had 6 months of inventory since going back to the earliest records I could find in 2013. We haven't even had 3 months of inventory since October 2014. For the last 6 months as of this video, we've had 2 to 3 weeks of inventory, less than 1 month. So given the truth of supply and demand, why is the inventory supply so low? There are 2 primary streams of homes. Let's look at each. First, let's look at existing homes. Part of the reason for the low supply is still the COVID effect. According to the New York Times, one of the primary sources of resale homes are folks that are downsizing or moving to group living. Of course, with the pandemic, no one wants to live in close quarters to others, so that source of homes has dried up. Also, sometimes it's self-feeding. If homeowners are afraid to sell, then fewer homes become available. Next, let's look at why new homes are in short supply. One reason is the housing crash in 2009. During that time, many builders went out of business, never to return. The rate of building new homes in the U.S. has lagged behind the population growth ever since. Next, material costs. When prices are as volatile as they are at the time of this video, builders will sometimes have to scale back. They have to pay cash for those material cost jumps, which limits their ability to build. Next, material shortages and delays. Supply chains have been disrupted over the past year. While that's expected to begin to smooth out, not only has it affected the price of materials, as I've mentioned, but the supply of them as well. Finally, labor shortages. Both builders and their suppliers have been suffering from labor shortages. In fact, according to the Washington Post, the industry with the most extreme labor shortage is the lumber industry, sawmills that supply lumber. So why is demand so high? Once again, the COVID effect. As I mentioned before, folks have become more home focused because more of their life is now spent there. Pent-up demand. Many people have been wanting to buy a home but haven't been successful in getting one. Demand stacks up. Interest rates. They remain near historic lows. Lower interest rates mean lower payments. People want to take advantage of that. Again, the affordability of homes. It's within the reach of a lot of folks. Normal population growth. More people mean more demand. Builders can't keep up. To sum up, as COVID starts to pass, some of these factors may ease up a little bit, but it's apparent that home prices will continue to rise. They might grow at a slower rate than before, but they'll still grow. Some folks think that waiting might be a viable strategy, but that will only work if the money you're saving is invested in something that grows as quickly as home prices. Otherwise, maybe not. I'll have a link in the description below to my video, The Cost of Waiting. That'll explain that if you're interested. Thanks for watching. If you like what you see, click on subscribe down below. If you'd like to be notified when new episodes come out, click on the notify bell below. We'll see you next time.
Count on me just like 1, 2, 1, 2, 3. You can count on me. You can count on me. You can count on me. Yeah, yeah, yeah. you can count on